Kindness is underrated in the VC world.
I think it's maybe seen as sometimes, for some people, a sign of weakness.
Entrepreneurship is a democratizer of wealth and access, but it is still so incredibly difficult for African entrepreneurs to access capital.
Here, a lot of things that are still fairly basic still need to be built.
Fraud is loud in Africa. What do you say to that when you hear that?
So we need to build other markers of trust and that make us feel like, okay, it's never safe, it's always risky, but it's still a space in which we're comfortable enough with the level of risk, given the potential returns and impact that can be generated through that.
Like, what are the top 3 mistakes that you keep seeing being done by entrepreneurs who are raising VC capital?
Yeah, many businesses are just not made for VCs.
I love that you said that. Yeah.
Because everybody wants to raise, etc. But it can also be a curse.
So welcome to the Doers Defined podcast, where our mission is to amplify emerging market heroes bringing positive change. And today, I am delighted to have my friend, Romma Diaz, and he is a founder of Satgana, a global venture capital firm that invests in climate tech startups in both Europe and Africa. And you've been a seasoned entrepreneur for a long time and a climate venture capitalist. So I'm delighted to have you on Doers Defined. So we'll jump right in. I'm curious, what's one incredible memory that you have from your childhood, and where were you raised?
So first of all, thank you so much for having me. I'm really delighted to be here. Straight to this answer, I think my childhood has many small memories, but it's mostly an overall feeling of happiness. So I was very fortunate to live in a middle-class family with no problems, grew up with love and grew up in France. And so for me, childhood mostly means pure joy and innocence and happiness. So, and I really realized that it is a foundational layer for my health and my mental health and for my stability as a person. I still have drive for a lot of things, but it is a ground that enables me to be a balanced person and to be aligned with who I am. So I'm very grateful for having had such a great childhood. I grew up in France. I've been traveling. I grew up in France for about 20 years, and then for the past 15 years, a bit all across. And I guess we'll get a bit more to these details.
Yeah, no, fantastic. So I probably should tell the viewers, we actually met through mutual friends, and they're also VCs in Europe. So Andreas in particular, and then Owen. But something that struck me was that when they were making the introduction, Andreas was talking about you, and he was in Denmark at the time. He said, kindness is underrated in the VC world, and you are not going to find somebody kinder than Romma. And I can confirm that that is true. Yes.
Well, thank you. And thanks to my friend Andreas. I think it's indeed a value that I do cultivate a lot, because I do think that it's underrated. I think it's maybe seen as sometimes, for some people, a sign of weakness to be kind. Mm-hmm. And I really believe that the world would be a better place if we had kindness more at the center of what we do and how we interact with people. And doing, non-transactional, free, not expecting anything in return kind of actions, and just being kind to other people, because we never know what other people go through, I think goes a long way, can touch people, can make an impact, and sometimes also return back to you in much greater way, although you don't expect it in the first place. So that's definitely something that I cultivate. And it's also, I think we also attract people in our community of founders, LPs. We'll get more into the work that we do, but I think a lot of people also align with our values. And I think it brings a touch of confidence, of trust, of softness, of feeling that we're in this together as a human experience as well, beyond the transactional of being venture capitalist, and all the cliches that go with it. And that's one of the many things that we're trying to change by also bringing these values that are very important to me as a person, to us as a firm, into our firm, and then into the world of venture capital and into the world more broadly.
I like that answer. And so a lot of people might not know that you have actually been in the venture space for perhaps a decade, and that you started out as kind of leading the way with Jumia, which was Africa's first unicorn, and then did some work with Far Ventures as well, which was a pioneering venture studio out in South Africa. But I'm very curious, when you were starting Satgana, what was the motivation behind choosing specifically climate?
Yeah. So indeed, it started the first part of my decade-ish of work on the continent was very much the passion around making an impact in emerging economies, particularly Africa. So a bit Morocco, South Africa for quite a few years, and more broadly across the continent. But for the first part, it was more impact felt like it was a natural way of just because we do business on a continent that needs development. Um, it by nature has impact because we built companies, job creation, capital inflows, etc. But a few years ago, so I was fortunate to have two exits more or less at the same time of companies I had co-founded, one full, one partial, and that enabled me to take time for myself, to really take a break, to went to India for a few months to really just think about what I really wanted to do next. And part of that thinking was really around I want to build a company that I can call the company of my life, that I can do for many decades, for as long as I'm healthy and good. And I want to do a company that has fundamentally a good impact in the world. So that's where the name Satgana came from. Satgana in Sanskrit, because I was in India, means a good company. So that's what we're trying to be for the world. But what does good mean is also part of ongoing definition. And to this date, so that was 6 years ago, 2018, 2019. And to this date, we have a much clearer definition of what we look for, of the kind of impact we're trying to create. But we still iterate within our investment thesis, for example, details like, okay, climate mitigation is a key central piece to what we do, but what about climate adaptation? What about biodiversity? What about reduction of plastics? What about resources use? What about access to water, etc.? These are adjacent themes that are both social and environmental, and we keep on iterating on our thesis of what good means, basically. But in short, it's about, for us, investing in change makers, in mission-driven founders that are way more intelligent than us and are really putting all the work and the mind and the heart as well into trying to make this world a better place through technology and business and entrepreneurship. And we bring both capital and resources, and we can get a bit more into the detail of our modus operandi, but that's basically how it all started. It was a realization that I want to put impact at the center of what I do. I think climate change is one of the biggest, if not the biggest, challenge of our generation. And it's an environmental problem, but it's also a social problem, because if we don't sort out our mess, if we don't drastically reduce emissions over the next years and decades to come, it's going to have tremendous impact, mostly social impact, mostly on the front line of people in the global south. And so tackling climate change, once you start to understand the holistic conundrum that we're in, it's a lot more than just temperature rise. It goes way further than that. And because of that, yes, we focus on environmental metrics, but it's actually as much environmental as it is social. And we want to do it with prosperity. So 3Ps, people, planet, profit, or prosperity, because we believe that to fund these entrepreneurs, we're going to need a lot of capital. And for that, we need to attract capital. And what attracts capital? Well, it's financial returns. And we are just one piece of the equation. We're private markets, private equity, venture capital. So it's a tiny subset of it. But the way we are doing it is that we think we can generate alpha returns that will show to the world that investing in coming back to our point, the good is
Mm.
actually also the right thing from a financial perspective, and that way we'll attract more capital inflows and hopefully amplify the impact.
I like that. And you started Satgana in 2020 and then successfully raised about 8.5 million euro to deploy into climate tech startups. And what was interesting is that for this first fund, you allocated 70% to Europe or to startups in Europe and 30% in Africa. And I'm curious what the impetus was. One, to work, I think, in both regions, because I think that's quite unique. And then the decision as to how you were going to allocate the capital as well.
Yeah. So part of it is intentional, part of it is naivety, if I'm honest. I was naive of how hard it is to raise a fund. But because I didn't know, we did it. So in a way, it's a bit of a blessing as well, because of course it's very rare. I don't think I know any other climate fund that invests both in Europe and Africa. And it's just that I had lived on the continent for 10 years in Africa, relocated to Europe a few years ago. I now mostly spend my time in Lisbon, or I live, that's my main base in Lisbon, but I travel a lot both across Europe and Africa. And because I was based in Europe, because my network was developing there, because a lot of my personal contacts in terms of high net worth individuals, family offices, and so on were also more in Europe. So I think it's also more reassuring, I think, in a way for them. I also wanted to do business in Europe because there's a lot of opportunity, there's a lot of innovation that happens, and there's also, coming back to my previous point on impact, a big need to decarbonize and to reduce emissions. So I thought, okay, let's just do it. I want to have an impact on both. I think from an intellectual curiosity, from an impact perspective, from a returns perspective, we decided to just do both. And obviously, that also meant we couldn't have institutional capital in the first fund, because usually you need to be either or. You need to be a Europe fund or an Africa
I
fund.
didn't actually know that.
I mean,
Yeah.
it's not a hard rule, but that's a realization along the way, is that we basically cut our ability to do so in the first fund, because most of them want to either they want you to invest in Europe, the EIF and all the institutionals of the world, or in emerging economies, all the DFIs. They want you to invest all your capital in Africa, and in that sense, it became almost impossible to have institutional capital in the first fund. But I was also okay with it, in the sense that I think we still have a lot to prove, and starting small is also, still a big fiduciary responsibility. Lots of people behind us, trusting us with their capital and so on. And so we'll go gradually, and the goal in the next couple of years is to split strategies, so to have one Europe fund, one Africa fund with different vehicles, LP makeups, and so on. But for now, very focused on deploying this fund, 8.5 million. We've already, today we're in October 2024, deployed about half of the fund.
Okay.
And
Oh, wow.
so yeah, about 20 companies, and we'll do about 30 investments. So well underway, and in about a year from now, we'll start to go back to market to be really serious on launching the new funds.
Okay. And I'm curious, right? What was the most challenging part of fundraising for the first fund?
Yeah, so at the beginning, I had an entrepreneurial track record. I had built companies on the continent, had failures, successes, both being as helpful as the other one. But I saw it as a form of track record, because I think that as an entrepreneur, you can relate a lot more to entrepreneurs' challenges when you've been an entrepreneur yourself. But it was not really considered an investment track record. And as such, a lot more difficult than when I can see today, now that we have a track record. We have a lot of portfolio companies that have raised new rounds of funding, markups, etc. And I can see that it makes a huge difference when we're going to go back to market in a year from now. We have a big story to tell from Fund 1. Whereas when you started, it was basically just me with an idea, with a lot of goodwill and a good heart, and ideas and a strategy and a good team around me and so on. but we had little to show for ourselves other than very strong will and values. And so I guess that was the most difficult thing. It was to convince people to allocate a small portion of their capital, to entrust it in our hands, to invest it on their behalf. But slowly but surely, we've used many things as stepping stones, very first small closings of some first investments. Some of them have been very successful, and then build from there basically. And the more you do it, and the more you do what you say what you do, you support founders, you go over and above, you really build good relationship, you think long term in everything that you do, etc., the more it starts to compound. So always doing the right thing. I like Warren Buffett saying it takes 20 years to build a reputation and 5 minutes to screw it.
It's true.
And I believe it very, very strongly. So always doing the right thing. And this, I can see it very much on a daily basis that it compounds basically.
Mm. And I think what I'm curious about, especially kind of being relatively new to the venture capital space. So we always say that specifically for Africa, entrepreneurship is a democratizer of wealth and access. But it is still so incredibly difficult for African entrepreneurs to access capital. If I was going to ask you, what is the issue? What makes it so difficult for entrepreneurs to be able to access capital on the continent, be it VC or any other type of financing?
Yeah. Well, first of all, there's less of it. So already makes it a lot more challenging than in other regions where there's a lot more capital to deploy, as simple as that, but also a much more sophisticated ecosystem in other regions like incubators, accelerators, grant funding, state support, unemployment benefits for, like, I come from France, you can hear from the accent. A lot of people benefit from 2-year unemployment benefits when they start their company usually. So for 2 years they're paid basically. You don't have this kind of governmental support here. Once again, grants, many different support structures that are really here to support entrepreneurship, infrastructure, good internet everywhere, free resources, etc., etc. And so Africa and emerging markets in general, but I know Africa better, is really starting from basically a lot more to still to be built up. And because of that, I think it really starts from a lot more challenging environment. Now, the flip side of that is that there's still a lot to be done that also opens up big opportunities as well. Whereas in Europe or in the US, there's also a lot more competition and less open markets. So here, a lot of things that are still fairly basic still need to be built, and so it can build blue oceans, but getting there is obviously very challenging. And a lot of capital allocators come from Europe, the US, more developed nations. And I think one of the challenges, unfortunately, of African founders is that if you don't really speak the jargon really well, it becomes an impediment to raise capital because you just don't have the lingo, you don't have the codes, etc. So having some exposure, we much prefer to back local founders. It's not a hard rule, but by far we prefer to invest in local founders, and that's the majority of the founders that we've backed here. But we see that having exposure to other markets and having either education or having worked somewhere else, etc., and then coming back to the continent is a huge asset. But not everybody can do it, obviously. Thing that is also wonderful is when someone really has lived the problem firsthand, coming from the continent, coming from the region, really speaking to customers and seeing it firsthand and really wanting to solve that problem. That is a very, very powerful driver. But ideally, yeah, of course, if you speak the lingo and the codes and so on, it helps. But we try to remove as much as possible this bias in terms of language, in terms of, obviously, of ethnicity, gender, all these things. We try to do the right thing and to look at what the company could look like if it starts to be on a path to success. And once we invest, that's also part of our mandate, is not only to invest capital, is to also support these founders by investing operational resources, sitting on the board if it's necessary, helping with strategy, with fundraising, with recruitment, with impact management, with fundraising support, etc., to get them to, once we invest, we become on the same side as them, basically.
Yeah, yeah, because you both want to win. So I think on that note, you've invested in the likes of Amini, Cubic, What Now? And I think if I was an entrepreneur watching you speak, I'd want to know, one, how did you find these entrepreneurs specifically? Where do you look for entrepreneurs, right? And what was it about them that made you feel that they were the ones you were going to bet on to get alpha financial returns, essentially?
Yeah. So we have three sources of deal flow. One of them is really inbound because the more you are out there in the ecosystem, social media presence, people know that you invest, etc., you have inbound. So that's the most quantity of deal flow we've seen since we launched over 3,000 opportunities that came our way, just inbound. So that's one source. Usually, unfortunately, it's not where we have the highest average quality, but it's still good to have the pulse on the ecosystem, and we still look at things in a rational way, whichever the source comes from. Second pillar of where we receive deal flow is from um, other ecosystem players, so either our LPs or other VCs that we speak with, etc. We get a lot of referrals from our founders as well. That we've invested in them, they like us, they know that a friend is raising, they send a friend, etc. And then the last one is us really being intentional about the sourcing. So we're looking for a company in regenerative agriculture, for example. Let's go out there, look for these companies, and us really doing a sourcing effort to really be intentional about looking for specific opportunities in certain markets, sectors, technologies, etc. So these are the three sources in increasing order of quality usually, because the more it's referred and the more it's really intentional, the more there's a chance that it's really in scope and aligned with what we're looking for. And once we see these opportunities, how do we assess them? So we look at basic business, metrics like size of the market, defensibility, unit economics, etc. Although usually it's quite early stage, so we, I think, pay a fair amount of attention to these kind of things, the pitch deck, the financial model, and IP, and so on. But we also know that the company can pivot 5 times in the next 10 years, because that's typically the time frame that it takes to build a successful company. So yes, we look at the business and the market and the space and so on, but I would say it's less important than the second pillar, which is really looking at the people. And I learn as well, or I base my rational decisions also with a part of intuition, looking at people in the eyes and really getting a sense of, do I believe that this person is driven by the right motives and is going to stick around? Because building a company is an endurance game, and everybody goes through ups and downs. Even the most successful one, it's never been linear or exponential. It's always ups and downs, and having the resilience, the perseverance, the intelligence to change course, go through very hard phases, challenges, etc., is really necessary. Being driven by the right reason. So we really look at the intentionality. Why did you create the company in the first place? And there's no standard answer, but it needs to be compelling, and not just I see a business opportunity, or there's just a window that I can slot myself into to make money. That's not sufficient enough, because I don't believe that it's something that is enduring for 10 years. We look at the impact. So what is the potential impact of the company from a climate perspective, from an environmental perspective, potentially from a social perspective as well? Do we believe that if this company scales in the next 5-10 years, it can generate massive impact from a CO2 reductions perspective, carbon removal, you name it, in terms of the metrics that we look at? And lastly, we look at the fit with the team. Do we see ourselves working with these people for 5-10 years? Do we see ourselves having dinner with these people? Do we really want to go out there and really be so vested and so willing for these people to succeed, because we, not only because we're vested, because we like them and we want them very badly to succeed.
Yeah.
So that's very important. And then evaluation, these kind of things. But these are the main things we look at.
But what was it about the founders of those?
It's in the eyes.
It's in the eyes. No, I think I remember you saying like je ne sais quoi. And sometimes,
it's
that
an
entrepreneur
exactly.
has that, and there's really
Exactly,
nothing that Yeah.
Yeah.
Okay.
Yeah, there's a part of I mean, it's a science as much as it's an art. Luck is also a big thing, of course, of who you meet when, which opportunity, and which are going to be successful, and so on. But there are some founders that really have that je ne sais quoi, which they manage to get you, to brain you. They manage to get talent to follow them, investors, partners. They have this natural charisma, they have this knowledge, and they just want, they manage to get anyone to want to follow them and want them to succeed. And that's this thing that is not in the financial model.
Yeah, yeah. No, it's interesting. But then, and I'm going to drive this a little bit further and ask if I was an African entrepreneur, right? And I think I have je ne sais quoi, and I have a brilliant business. I've created a good team. What advice would you give to them to help them in terms of fundraising and raising capital?
Yeah, so first on whether they need to raise funding at all. So that's also a big question. You can bootstrap the company, and I believe that VC raising money and so on is famed because you get in the media, because everybody wants to raise, etc. But it can also be a curse. It's not fit for many business models that would be way better off growing either more slowly, and growing more slowly doesn't mean smaller outcome in the end for founders, because if you own 100% of a company that exits for, let's say, 10 million, you might make more money that one where you've been diluted several times and liquidation preference and you name it. Sometimes founders have a big exit but actually get nothing home because of all the complexities of what happens over the course of fundraising. And yeah, many businesses are just not made for VC. So also asking yourself, is this really made to raise VC capital? Because if you want to go that route, it has downsides in terms of dilution, in terms of control, in terms of what can happen in terms of expectations of growth, etc. And and also it takes a lot of time to raise VC money. Like if you really want to raise a round, it's your first round. If you don't have pedigree, track record, and so on, it takes a year from the moment that you fundraise. Many entrepreneurs, and I'm myself an entrepreneur, like by mindset and by trade, I'm seeing myself as an entrepreneur. So I also tend to be too optimistic. Most entrepreneurs are too optimistic. A lot of them, us, think, okay, that round can be done in 3 months, but in reality, a lot of rounds are more like 6 months, 9 months, sometimes 12 months, sometimes even more. So it takes a lot of time, and usually it's time away from the business as well. So
That's
once
true.
again, coming back to even like there's a lot of Google resources, ChatGPT, you name it. Is my business fit for VC? Because if not, then you might as well spend more time talking to customers than VCs. And but if you really decide that you need to raise VC, then yes, there's a lot of online resources once again that are very, very valuable. Speaking to VCs when you're not raising is also helpful to start getting feedback, to ask, okay, what would you want to look for in terms of milestones, in terms of metrics, etc., before we can really have a conversation about raising. Surrounding yourself by a great full-time team, advisors can also help. And then, yeah, really thinking long term, I think, is so underrated as well. That building a company is a very long game, and yeah, knowing your why very clearly, why you're doing this, and can I stick around to this why for many many years? Because once again, entrepreneurship can be very tough, and so if the why is not strong enough, it will not enable you to weather all the storms that you might go through as an entrepreneur. So connecting to that why is super important.
And I think as you speak to a lot of entrepreneurs, right, and you are going to give them advice on maybe particular mistakes that you're constantly seeing within the ecosystem that they could correct, what would you tell them? Like, what are the top 3 mistakes that you keep seeing being done by entrepreneurs who are raising VC capital?
Usually, we see a lot of them being too focused on the fundraising slash VC side of things versus customers. There's some form of law of attraction that I notice is that when your business is doing well, VCs want in, even if you're not pitching them. And in those cases, it's actually the VC pitching the entrepreneur. Can I invest in your company? Please, can I invest?
Yeah.
Like in 95% of the cases, it's entrepreneurs who are on the sell side, if you will, and the VC, which is more on the buy side of, okay, maybe yes, maybe no. But in 5% of the cases, the company is doing so well that it's actually the entrepreneur which is, on the buy side of, okay, I have plethora of options from basically any VC which is in my scope, so I can choose. So I ask them, okay, what's your value add? How will you help me, etc. And so if you can be in a position that because you build the right product, you really understand your customer, you really have a business which is growing, you generate impact, you create jobs, etc., focusing on the business, then the fundraising becomes a lot easier and you have a lot more choice. So that's typically a thing that we see a lot, and it's a luxury. Obviously, it's a
Yeah.
very tiny minority of entrepreneurs who have the luxury of being in that position. But if you can be, obviously, that's the ideal scenario for an entrepreneur.
Yeah.
As long as you raise the right amount of money, because sometimes you can also be tempted to raise way too much money at way too high valuations, which is not necessarily justified. And it can sound cool in the moment, but actually 1 year, 2 year, 3 years down the line, you really need to then hit big milestones to almost catch up with your previous valuation, because otherwise you might have a down round or no follow-on investment from your existing investors. And over dilution and lots of ugly things that you want to avoid. So usually it feels nice in the moment to raise a lot at a high valuation, but further down the line, it can really backfire. So that's also a thing to be careful of. Yeah.
Okay. And then I think the sentiments, I think, in the market are that African businesses don't exit, right? And so you generally don't hear of any exits. In fact, I can only think about my friend Daniel Yu of Wasoko, just with the merger. What do you think needs to be done to see more exits within the ecosystem?
Yeah, it is indeed a big problem because every year there's about, give or take, 5 billion that are invested on the continent in VC. And those billions of dollars invested will need to be exited at some point. It's still fairly new. It started in the, let's say, early 2020 that the VC ecosystem really started to attract, call it billions. And those investors, funds will need to exit at some point. So in the next couple of years, we will need to have exits, and the exit pathways still remain fairly unclear. So what do we need? I don't see it coming anytime soon, but opening public markets with local stock exchange would be really amazing. In South Africa, Egypt, you name it, and in stock exchanges that could start to list companies, maybe with lower requirements in terms of revenue, in terms of what you need to have in place, etc. It's maybe a bit idealistic for this cycle because I don't know if it will really happen, but it's really something that would, I think, really move the needle also for African local retail investors to be able to invest in this breed of companies that are technology enabled, change the lives of people on the continent, etc., and be a small part of these companies. That would be ideal. But obviously there's a long way still for it to really be real. We need a lot more secondary exits as well. So as pre-seed investors, the road is very long as well for us. We're almost like right after the entrepreneurs start. We're really almost first in the boat, and we also have limited fund lives. Typically, it's 10 years plus one, so 12 years. But you have an investment period, so you start after. Sometimes you invest after 4 years, so your time frame remains somehow limited. Ideally, you would have longer time frames for your funds, even evergreen funds, etc. But the reality is that most of them are still 10 plus one. And so it can be sometimes a bit of a short window to exit. And having secondary liquidity options along the way through private equity, trade sales, and generally openness from other investors to buy out existing investors, I think would be a good pathway to liquidity until there's more M&A activity on the continent from, let's say, international players buying, acquiring local businesses, or more mergers, etc. But I think secondaries is a big one until we really see a lot of exits a la Paystack, etc.
Yeah, yeah. So I was in Dubai and I remember being in a meeting room and there were tons of investors in there. And a good friend who I'll eventually bring on the podcast who runs a pretty sizable venture capital fund. And I was interrogating her about why she is not invested in a lot of African businesses. And her words to me were, Elsie, fraud is loud in Africa. What do you say to that when you hear that?
So there's countries in which there's more fraud than others. I won't name countries, but we tend to invest in countries that we know, in which we've been, in which we have some form of presence on the ground, in which we have local partners, typically co-investors. So we need to have trust-building elements in order to feel like we're not just putting money very far in a country that we don't really know with no other co-investors, etc. So we need to build other markers of trust and that make us feel like, okay, it's never safe, it's always risky, but it's still a space in which we're comfortable enough with the level of risk, given the potential returns and impact that can be generated through that. So that's all in all my response. I think there's maybe again, depends on countries, and I don't want to speak for the whole of Africa because it depends on countries. But in the countries that we invest in, which is mostly Kenya, we've invested in Ethiopia, which somehow can be perceived as risky. We've invested in Tunisia, we're looking at South Africa, we look at a few other countries. I
You're in
think
11 countries, right?
including Europe.
Okay, including Europe.
So
Okay.
in Africa, only 3 countries for now that we've invested in, and in Europe, pretty much all across Europe. I think the perceived risk is actually higher than the actual risk. If
I
you,
love that you said
Mm,
that.
mm.
Yeah, yeah.
And once again, risk and rewards need to be correlated. And we do believe that although there's no big track record of past exits, this path to exits are going to open, I believe, and the healthy, good, fast-growing businesses that we've invested in so far, I believe will have a pathway to exits and will justify the so-called risk that we've taken investing in these countries.
Satgana is unique in that you're very specialized, or I think the focus in the asset class, so climate tech. So I think for those who are not familiar with what is climate tech, if you're going to define that, and then describe what that asset class is, what types of businesses are you looking for?
Yeah. So climate tech is technologies that contribute to a more sustainable future. I think that's the broadest definition. Sustainable future can include either only focusing on climate mitigation, which means reducing emissions and removing carbon from the atmosphere to get us closer to a net zero future. But a broader definition to that is also including climate adaptation, especially in the context of emerging markets and particularly Africa, is how do we adapt to a warmer climate, to a climate where there's more droughts, there's less water, there's crops that need to resist, etc. So it's a completely different paradigm. So it's not about fighting climate change, it's about acknowledging that it's already a reality for people on the ground, especially more vulnerable community, especially women, especially people at the bottom of the pyramid, economic pyramid, etc. So climate adaptation is also a big one in the definition of climate tech. You can also include what's beyond carbon. So we like to think that we shouldn't have a tunnel vision only on carbon, but look more broadly at the holistic aspects of what a sustainable future means. That's biodiversity. I believe it's as much of a problem as climate change, if not maybe even biggest. We've lost 60% of species in the past 50 years or so, and that is also very much happening here in Africa and in more tropical areas that contain most of life on Earth, that are deforested and are really also suffering from climate change. So it's also very interrelated. So we also invest in biodiversity, reduction of plastics. Plastics is a huge problem, particularly in emerging economies, particularly in Africa. So, for example, we invested in Cubic, which is from Ethiopia. They transform plastic waste, which is piling up in landfills, to make construction bricks that are low carbon, circular, more affordable and efficient for population and affordable housing. So it's a social and environmental company. Very, very proud of them. And
They've done well. Yeah,
they are
done
doing
very
really
well.
well. Yeah,
Yeah.
yeah. So yeah, that's climate tech. It's anything that gets us to a more sustainable future, and it's technologies that can be either software, hardware, and we invest in both. But we invest at the really early stage. So typically, technology readiness level is still somehow advanced, but it's still not 100% proven before being able to scale. So we also need patient capital for that. And it's really early stage in the development of the companies, whether it's deep tech, breakthrough technologies that still are coming out of the lab, or whether it's more software, a bit more proven, but still really, really early stage in terms of development. And we support them from the very early stage, typically first check in as pre-seed investor. And then, yeah, we plan to be there for the very long term with them.
So this is a long-term
Yeah,
investment, even
yeah,
for you as well.
yeah.
But then how will you define success?
Yeah, so we are building a portfolio of 30 companies that fall within our scope of climate tech, about two-thirds, 70% in Europe and 30% in Africa. So that's already what we've promised to our LPs. So we're well on our way to doing this. From a financial perspective, we want to do top decile returns. So that's typically 5 times multiple on invested capital net, 25% IRR. Most fund managers target that, but I do believe that we have a good shot at it. At least our early, we have markers that we are well on our way to do this. And for us, it's not only about making money for ourselves and our LPs, but it's also about showing that investing in the good, investing in transformational companies that will get us to a better future is also the right thing for business. Because if we do so, we will be able to attract more capital to invest in more people doing the right thing and building a better world, basically. And so we also measure impact. So it's more on a company to company basis, because we don't only invest in climate mitigation. So each company has its own set of metrics, whether it's environmental or social, carbon, biodiversity. Each of them has a different set of metrics, but we work with them to define those theory of change, those impact management framework, and really maximizing impact. Because if we just make money and don't deliver on impact, I will not consider this a success. So we're also building this impact muscle along the way.
No, I wish you well. But and the feedback that we get, as I'm speaking to different people in the ecosystem, is that Satgana really cares about the entrepreneurs. And I think you had a situation where, because of that care and that kindness, an entrepreneur, I think, wanted to go with you versus another, perhaps bigger venture capital firm. Can you just tell me a little bit about that?
Yeah.
Yeah.
I mean, we lose deals, we win deals, but in many cases, we've been fortunate to be chosen by the entrepreneur in competitive deals that are by amazing founders doing amazing things. And in these kind of cases, it attracts a lot of potential investors. Sometimes we were one of them, and we articulate our value proposition of why us. And sometimes it's speaking to the left brain of people, but sometimes it's also the right brain and the heart and whatever you want to call it. In also due diligence things, a lot of them do reverse due diligence on us in speaking to some of our existing founders. And that's also part of the flywheel of doing the right thing, is because we really care, we really go the extra mile to support our entrepreneurs. They luckily speak well of us, and that enabled us to win some of these competitive deals, because people were saying really good things about us. And that's what we're trying to cultivate, because it's about doing the right thing. It's also more fun. It's also it gives us a better feel when we have this good relationship with entrepreneurs, because once we invest, we're in the same boat anyway. So rather not try to get rich on terms, but on scale rather, and be in the same boat. So that's very much part of our philosophy. And so doing the right thing really pays off. We know it, and we keep on seeing on a daily basis.
Yeah. No, I'm super excited about this journey for you. And I'll continue to keep tabs on obviously what you're doing and how you're doing it. And then I think more on a personal level. So where do you get the inspiration? Yeah. Who inspires you?
So first of all the founders that we invest in, and also those that we don't invest in, to me it's truly it gives me a lot of energy. I think among the different activities that we have as a fund manager, we do fundraising, we do new investments, we do portfolio support, we do back office stuff, we do marketing stuff, etc. I think what gives me the most energy is wins from the portfolio. And we're very close to our entrepreneurs. We speak to a lot of them almost on a daily basis or weekly basis, but a lot of them, we have a very close connection, so they also share their wins with us, and that's really what gives me the most joy and energy. And yeah, it's really to see them starting initially from an idea of wanting to make the world a better place, and slowly but surely you start to see the bricks coming up
Yeah.
of it being real, and that gives me a lot of energy. And so that's more within my realm. And outside of my realm, I've had a lot of inspiration from some people that I look up to. um, I think a famous question, and I think you wanted to ask this one around who would you have dinner with,
Yeah,
right? If you could choose.
yeah, because I'm always curious.
Yeah,
I really
yeah,
believe in community.
yeah,
And I think who you bring on a dinner table
yeah,
actually says a lot about where your values, and I think who you are as an individual as well.
yeah,
Yeah, so I guess you can answer that as
yeah,
well.
yeah. A very good friend of mine, who actually, Kodola, she helped us on the setup of the brand, of the launch of the fund, and so on. She responded to that question for me because she knows me so well. She said, Romain, if he's asked this question, he'll answer these three people, because these are really the three people I think that I've drawn a lot of inspiration from. One is an entrepreneurial figure. It's Richard Branson. I've had a lot of inspiration from his entrepreneurial ventures, having impact, having fun on the way, being involved in so many different ventures, being like failing hard and succeeding big time, and a very relatable person. And I learned a lot of his entrepreneurial mindset from quite a young age. One is more political, so to say. It's Nelson Mandela.
Mm,
I've drawn a lot of inspiration from his integrity, from his devotion to the cause, to his long-term thinking, and his integrity. So actually, without him, I would not have moved to South Africa, because it was just
interesting.
reading his autobiography. I was like, wow, I really want to discover that country and really want to understand it from the inside. So a lot of inspiration from the man. And the last one is the Dalai Lama, because again, his values of integrity, of compassion, of empathy, of peace are really values that inspire me. Actually, the name Satgana came from a trip that I did in Dharamsala, the city where he
Mm-hmm.
lives. And so it's also a very personal story for me to be inspired by people who I can really look up to. We have different life paths, but these are some of the inspirations. So if I could do a dinner with them, I'd be probably quite intimidated. But it would be my pick
Yeah,
choices.
no,
Yeah.
and well-known individuals as well.
Yeah.
Yeah, no, fantastic. But you have a real calm about you, you know? And so I'm curious. Finance, VC world can be somewhat cutthroat. But what do you do to sort of take care of your inner core?
So first of all, being very aligned with what I do. So there's no internal fight. I'm very at peace with what I do. I had enough time to really think about what I wanted to do, to know that, okay, this is it. I can run this company for the rest of my life, hopefully. And I'm very at peace with what I do. I do believe that it's an area that can have a lot of impact by supporting the right entrepreneurs that I want to see emerge and succeed into the world. And so it's also a part of responsibility as an investor, managing people's money who entrusted us with some money, but also investing. So because we catalyze a form of entrepreneurship, and people who will have also capital for themselves to deploy and to at some point have wealth, etc. So it's also part of our responsibility. And I really believe that being in this space and doing it with the right intent and values can make a difference in the world. And so I really feel like I'm in the right space, even though VC can be cutthroat, etc. But we try to bring a different approach, maybe bring some more soft elements to it, although we work hard, and we're also in competitive deals and do all the things that most VCs do in terms of hard work, but still being driven by very good values. And again, that compounds over time. So it's also the right thing, I believe, for our LPs and the people with us and our founders and so on, by again doing the right thing. and also, yeah, taking care. I really take care of myself, and I take care of the people around me, and I really invite our founders as well to take care of themselves, because it might be sprints within the marathon, but it's a marathon. So taking care of their physical health, mental health, and general well-being is super important. And always thinking about the what's best for the company and not what's best for me as a VC, because that doesn't go a very long way.
True. And so I think on a personal level, as we're ending, what's your definition? What is the definition of legacy for Romma as the individual?
I will be extremely proud of the work. I'm already proud of what we've done and the founders that we've backed, etc. But I will be even more proud when one day I can really pass on the baton of running the company when I'm too old, too tired, not relevant maybe, to other people, ideally from diverse backgrounds. So I'm obviously a white man, straight, coming from a form of privilege, etc.
Yeah.
But if it can be run by people who have historically been either underprivileged or just coming from backgrounds that have not been in a position to manage capital and be decision makers and so on, I'll be really proud. And yeah, and having backed hundreds of founders, allocated many dozen, hundreds of millions of capital into making this world a better place and having enduring companies, and doing so with the right values, and really seeing that the people at the helm of these companies are leaders that bring a positive contribution to the world. That's really what I'm wishing for myself and for the organization that I'm fortunate to run today.
Yeah. No, thank you. Thank you, Romma. Thank you for just the dedication, I think, to the continent in addressing an area that is incredibly challenging, which is climate, which we see the impact of on a daily basis. And it has been such an honor, one, to get to know you and then realize all these wonderful things that I hear about you all over the world. I think the last place was Luxembourg, are actually true. And I think even the last conversation that we had, we kept saying kindness is underrated. So thank you for being the person that you are, for having this mission, and for putting yourself out there to make it a reality.
Thank you so much, Elsie, for the kind words, for having me, for also letting me use this as a platform to amplify the work that we do, and also for the work that you do, also amplifying voices of other people doing incredible work in the climate space and beyond in Africa. So thank you so much, Elsie.
Yeah, you're welcome. Thanks.